I'd like to thank everybody for joining me on today's call. Today, I want to talk about how to design life insurance policies. And the reason we need to have this discussion is life insurance is like a Swiss Army knife. It can accomplish a lot of different things depending on the problems we're trying to solve. If you understand the ability to change how the design is in the insurance policy, you're going to be able to help your clients achieve their goals. One of the things I like looking at is trying to figure out, what's best for you. Think about this. Think about the first cell phone that came out. And the first cell phone that, even predates this picture, there were these big bricks that, had a phone attached to them. They were just big, they were difficult, but they solved a new problem. They allowed us to be able to be out of our office, away from our home, and still connected to the people we need to connect to. But think about as things have progressed, do you have the new, the best, and a model phone that helps you? And think about all these things that have been added to the phones. Originally it was just talking on the phone. Then it was texting. Now we have these little computers in our pockets that really we can do about anything we need to do, all from the convenience of our phone. Well, I bring this up because as phones have evolved, so has the life insurance industry. There has been a lot of evolution over time. And the reason we have the evolution in the life insurance industry is so we can really help our clients achieve their goals. Now, if you look at all this, we can have term policies that are just pure death benefit. Whole life allowed us to grow cash value. Universal life came along to offer more flexibility. Variable life and index life came along to get better returns along with flexibility. And the new evolution is a lot of new riders that can be attached to the policy to provide long-term care, chronic illness, terminal illness, ways that you can accelerate your death benefit to take care of you now and prior to death. So all of these evolutions in the life insurance policy world brings us to the question, do you have what you need? If you've bought a policy 5-10 years ago, is it time to upgrade? Just like we change our mortgage, if interest rates go down, can we improve our mortgage on our home? If we see that we can improve our financial picture, why aren't we doing it? And so that's what we want to do in the life insurance world too. When we're looking at designing a policy, the first thing everybody thinks when they hear life insurance is death benefit. And that is a big component of every life insurance policy. Now, we want to look at this and say, is it the primary goal of this policy is a large death benefit? If we need to maximize the death benefit, of course, we want to minimize the cost. We want to have the lowest amount of premium to create that death benefit that we need. And think about ways we can use that death benefit. It can be for estate liquidity, provide for our loved ones at death, pay off a loan, buy out a business partner, pay estate taxes, equalize distributions to your children or grandchildren. And one that I really think is important, if you have a special needs child, providing a death benefit for that special needs child inside of a trust to make sure they're taken care of during their life. There again, those are all great goals to be accomplishing. And if that's what we have, we want to maximize the death benefit in the policy. However, if we are looking at the reverse, where we want to maximize the cash value, and a lot of times we maximize the cash value because we're growing a cash value that can be accessed tax-free. And so maybe we want to add this for tax-free access during our retirement years, maybe between now and our retirement years, to make sure we have the capital to grow a business, make investments. Maybe it's just to take a trip around the world. Whatever it is, we can grow that cash value efficiently inside of a life insurance policy. But to do that, we want to reduce the death benefit as low as we can without violating the IRS's rules on the size of that death benefit, because it still needs to be treated as a life insurance policy. So there again, reduce the death benefit, reduce the mortality cost, the charges inside the policy, get it as low as it can be, and grow that tax-free death or cash value so you can access it tax-free when and how you want to. Now, with life insurance, there's a lot of key features that we need to make sure we're aware of, and we really need to make sure our clients are aware of. The first one is you can have an income tax-free death benefit. It can be messed up. It's rare that it gets messed up, but most of the time we get an income tax-free death benefit. And also, if you want that estate tax-free, we can put it inside of a trust, transfer it, have that death benefit owned and paid for by a loved one. All of that is so we can create tax-free death benefit at the time that somebody passes away. Like I said on the previous slide, we might want to grow that, grow cash value inside that policy. We can grow it income tax-free and distribute it tax-free. Think about that. It's the beauty of growing a policy now that we can access at any time without the IRS is getting their finger in the pot. And here's probably the big part of this. You can access this at any age. So if you're funding a policy, let's say you're putting premium into the policy and you plan on paying premiums for the next 20 years. But along comes year 4, 5, 6, and you have a hiccup in your business. You have a hiccup in your personal life. You just need to access cash. Well, when you need cash, you can look at what's in your bank account. You can potentially take a loan from your retirement account. It's one where you can go to the bank, really access third-party money if it's cheap. Or you can always access the money in your life insurance policy if you've designed the policy for that. And designing it means you've designed it to grow cash value so that you can access that anytime you want, when you want, without the IRS putting their fingers on the pot. This is one that I like, is no limits on contribution. You can design that policy as long as it meets the guidelines of the insurance company so that you can put in the amount of premium, put as much cash into that policy as you want to. Now, we always talk about Roth IRAs, and I think Roth IRAs are a great tool. A lot of times with Roth IRAs, I work with clients that can't put the amount of money into the Roth IRA that they want to. They're limited. There again, Roth IRAs are good. You can put the money in, you can grow it tax-free, access it tax-free. But there again, can you put in the amount of money you want? With a life insurance policy, we don't have that restriction. And so we can put in, hundreds of thousands if that's what we want to do. So there again, you design the policy for what you want to put in. There again, the one of the newest evolutions in the insurance industry are riders that you can add to the policy. These riders can provide for long-term care benefits. They can provide for terminal illness benefits. If you're going to die within the next 2 years, you can access that death benefit now versus later. You can have chronic illness benefits or critical injury benefits. Again, these are riders that help you not only if you have a policy that has cash value, you can access this, but these riders can be added even to a term policy. So that if you need that, you can accelerate that death benefit. Use it now to take care of those needs that have come up. There again, what if we need to change in midstream in the planning? When I look at life insurance, there's features and designs of the life insurance policy that allow it to be a great planning tool. And if you look at the planning tool, all of these different areas of our planning, whether it's tax planning, estate planning, retirement planning, business planning, all of these areas really come together, and we can finish the rest of that puzzle by using a properly designed life insurance policy. And I want to emphasize a properly designed life insurance policy. We want to make sure that policy is designed to fit the goals that you have, that we're solving the problem. And sometimes that might mean we need 2 policies, maybe one to build death benefit, one to build cash value. There again, 2 goals, maybe 2 policies, but there again, let's make sure that we're getting this designed the right way. Finally, when I look at life insurance, it helps us fill the bucket. those buckets are tax diversification. You know, requalified plans are great plans, but remember, tax deduction now, taxable later. Our taxable bucket is our current income, business income. We're taxed on gains and capital gains and ordinary income now. But a lot of times we need that third bucket tax-free. Can we fill that tax-free bucket? Do our clients understand there's a tax-free bucket that can be filled, that we put the money in, we grow it tax-free, we access it tax-free, and if there's a death, we've got an income or potentially a state tax-free death benefit. It's a great bucket to fill. We just need to be aware of it. So if you look at it, life insurance is a great tool. We just want to make sure we design that tool to do what our clients need. And if you have questions, feel free to reach out. I appreciate everybody getting on, and we'll talk about this next week. Thank you.